Hello, everyone. This is Barry Melancon. I'm CEO of the AICPA, and I'm here with Erik Asgeirsson, who is CEO of CPA.com and is the person who has been really totally focused on all of these issues with PPP and also our ecosystem. And we thought we'd take a few minutes to just discuss this past week with you because a lot of things have happened, and frankly, a lot of things were likely to happen in the near term. We wanted to give you an overview from that standpoint. One of the key things is that we did get some guidance this week as it related to some of the application processes. We were really happy with that. It did not go into a definitive definition of liquidity, which we thought was the right answer at this point in the program. That comports to the blog that I issued a little bit over a week ago. And it also made clear the process for under $2 million PPP loans converting ultimately into grants, how that application would be looked at, and some safe harbors that were with it. There's a lot of details associated that we've covered in a lot of other areas, but it was important to realize that that was a big step forward. And really where we are today is to really go into how the program still has to evolve, what guidance is still necessary, and some things to think about along those lines. And towards the end, I also want to just mention a little bit about tax deadlines. So Erik, why don't you give us an overview of where you think the status is and some of the key components as well?
Thanks, Barry. First, we clearly are in the forgiveness phase, but just let's look at the numbers. To date, over 4.4 million businesses have received loans. The value is around $536 billion. There's still over $115 billion left. The size of the loan now is decreasing in this round two. The average loan size is $71,000. So we're going to talk a lot about forgiveness, but it's still important to support clients with applications because there's still a lot of available funds. Regarding the two top issues that we've been talking about, one was around the liquidity question. That was answered. There's general relief around the FAQ 46 that came out, as you just noted, Barry. So that's a big help, and hopefully that will generate more applications from businesses that need it. The other big issue that we're working on, and we're working on this with the broader coalition, is around the forgiveness guidance. And we have a number of forgiveness recommendations. We've developed a forgiveness calculator, working closely with our coalition partners, which include ADP, Paychex, Intuit, Gusto, and many others. And we have provided these recommendations to Treasury and SBA. So that's what we're very focused on right now. And there's a lot of interest by the firms to understand this so they can start, building this process with their clients.
That's right, Erik. And we have sent our set of recommendations, which we vetted with the coalition that you've helped to lead, Erik, to Treasury. So they have our recommendations in hand along with our calculator, as you just referenced. There is strong indications that guidance is coming out imminently. We've heard that before. We do recognize that borrowers or people who qualify for PPP early in the process in the first phase, we're basically halfway through their 8-week period as it's currently defined. There's a lot of movement in the system about potentially changing the 8 weeks or changing the calculations. Some of that will take legislation, which means it won't happen till the tail end of the 8-week period. And so this uncertainty, we understand that frustration. And what our plan is, and this is a bit of a risk, our plan is that if the guidance does not come out in that imminent fashion, that, by early next week, we would be releasing to our membership for you to work with your clients our recommendation, which has again been vetted through the coalition, and the calculator. Now, obviously, if Treasury comes back to us and says, hold on, it really is imminent, we really are coming, we don't want to add to the confusion. But at this point in the process, we feel like we have to take some risk along those lines. And that's really what we're trying to balance. And we truly understand the frustration. Again, I would remind people are trying to do the best intentions here. But, we're going to push that envelope if by early next week there isn't anything coming out to help solve that particular problem. And the way I would encourage our members to think about it is what we produce at that point, if there isn't something from Treasury, would fall into something we're all familiar with, the term generally accepted. It's not going to be absolutely authoritative, and it is subject to change if Treasury ultimately came out with something else.
Yes, Barry. It's very similar to what we did with the loan calculator. There was a lot of loan calculators that were produced. All the guidance wasn't clear. We came out with recommendations, and that helped the process. And where we're at right now is there is a lot of interest in us releasing a forgiveness calculator. But as you said, it could be imminent, and it could happen today, this Friday. So, and we're in discussions with many parties on this. So we want to see where things stand, but then we will get this out, as you said, shortly, even if we do not get the definitive guidance from Treasury. And what's been happening is every week, probably twice a week, we've gotten a new interim rule from Treasury or a couple of FAQs that we've been digesting, and that's just been the process. So it's producing anxiety with the small business clients. The firms are doing a great job of getting their arms around it. We talk about this every week on the town hall series. We've been having practitioners join us, and we're just providing them the latest information. So we're just quickly talking about this right now, but we have archives available, and people can listen to a 1-hour session where we go into greater depth on these topics.
So 2 topics I'd like to, in that spirit, to talk about, not in the depth that you do in the town hall series, but to just make a note. First, you might want to comment on, there was some guidance on making an additional loan request that could turn into forgiveness as it relates to partners and partner comp. SBA issued some clarity from that. Just make one comment on that, and then I'll add to it.
Yes. So there was an interim final rule that came out this week where there now is a process on how you can add the partner comp to your loan calculation. This will be something that you work on with your lender. There's a Form 1502 that the lender will be filing as part of this process. And we did discuss that in greater detail on the town hall.
Right. And so what the point I would make is that as you're working with your clients, while that is potentially a way to increase it, if there is no change as relates to the 8 weeks or otherwise, you might want to think about where there hasn't been sort of the loan on the basis of partner comp. The partner comp can maybe be used to help meet the 75% rule. So that's not a horrible position to be in. But obviously, if there is change in the 8 weeks or the 75% rules, then you have to, step back and think about it with your client as to what's there in their best interest. The second part of this, Eric, is sort of this cut between the 2 million above and below. It's clear below the 2 million. And I think we would go back to the intent above the 2 million. This is where we've been all along. And I think the interpretation that came out supports that. It still goes back to, have you been impacted? But yes, there's some other considerations that you want to think about with your client and document for as they get to the forgiveness part, down the road.
Yeah, well said. And one thing that I just want to comment on regarding the overall banking community, we continue to work with the banking leadership. We do have that statement that we worked on with the American Banking Association related to the firm-lender relationship. We do know that there's issues out there. We're aware that there's some disconnect on the payment of the agent fee between banks and firms. Please make us aware of those. We're trying to resolve them. But one other thing that we're talking to the lending community about is the whole forgiveness process and the forgiveness matrix that we've put out. And Barry, so you may want to talk about that, because we think this is the next phase in the relationship with the lending community. And what we want to do with the lending community is to work on making sure we're not or find the fictitious or fraudulent applications that we know are out there. And that's something that the lending community is concerned about. We're concerned about. There's been some articles on that. So so we're aware of the issues related to the agent fee. We're trying to work that. And then we have this next phase now with the lending community around the forgiveness process.
Right. And clearly the fraudulent part is something that as a profession we should be very cognizant of. If we see or hear anything that would point in that direction, we should be aware of it. And that's a fraud statement. That's not about, the application for a company that is a true company and has had some implications from the economy and from the COVID-19 situation. But we do know EINs are a really important part of the application. And so there can be some fraud in the system. And I think the whole system wants everybody to be aware of that. And certainly we should be doing our part as well. And then I think as it relates to the forgiveness matrix and the like, I want everybody to know that we do have guidance that is going to be out there for agreed upon procedures engagements or consulting engagements. As soon as there's some clarity in that process, that's going to be finalized and exposed out there. We already have some of the forgiveness matrix out there already that you can look at. I think in some of the larger loans, there may be agreed upon procedures based on whatever the final rules are, or consulting engagements in some of the smaller ones that the banks are going to want to convert it to a forgiveness environment. That is still to be worked out, but we have guidance out that. We have engagement letters ready. Those that are insured through our insurance program with Aon and CNA, their engagement letters going to be published through that process. They're going to be publicly available, so even firms that are not insured in that process will be able to access it. So each sort of step of that process is being addressed. And again, the key is having some answers in the whole forgiveness equations and where that might go, which leads us to our last couple of points, Eric. And that is, there are a lot of things related to PPP and it's been called the HEROES Act, which is the House version of the next phase of relief, including some changing of the 8 weeks. Remember, our position is that they should change the start time of the 8 weeks because of businesses that have been closed. The Congress at least is debating even going further than that. We have said to Treasury and others they need guidance now because we're in the middle of the 8 weeks. If you want to change it to something other than 8 weeks, that's going to take legislative action. But frankly, that's going to be some time. It's going to be a while before the next phase reaches an agreement between the House and the Senate. The deductibility of payments with PPP proceeds is in the House version, and it's got bipartisan support on the Senate. That would sort of indicate that that comes up to a higher likelihood of something happening if there's not guidance in that. And there's a whole host of other things in play with PPP, for instance, making 501c6s eligible. That's in the House version. That's something we have articulated as well. But that's not likely to happen until and if there's another piece of legislation. And then the last point, and Eric, and I'll give you a chance also to make any high-level observation. This isn't a PPP issue, but we're getting a lot of requests and information from our members related to the July 15th tax date as to what we think will happen from that standpoint and where that's likely going. And some of our members say, well, we'd like a sort of an en masse type of movement of the July 15th date, and a lot of others would prefer not to see that. And so it's a mixed bag. I think the likelihood is that right now you probably will be in a situation to file extensions if necessary for July 15th, like you would have at April 15th. But it probably doesn't point to a total movement of the filing and payment dates to some other date. There is one big contingency on that, and I think that's IRS capacity. IRS is functioning at about 20%, 25% for a lot of reasons. The biggest one is the security issue. Their employees are not able to working at home dealing with taxpayer-sensitive information. So if that capacity is not able to be addressed, then that starts to affect the filings of returns on July 15th, and you could see something. But don't automatically assume that goes to October 15th. It could be August 15th or whatever. But I think the safest assumption at this point is July 15th remains the sort of old April 15th. And you may have clients that extensions are appropriate, and you may have clients that filing, by that due date is appropriate. So Eric, let me give you a chance to give you any of the high level points on PPP or otherwise, and then we'll close.
Yeah, I'll just close a little bit more broadly. I mean, the situation is very fluid, as you stated, with PPP. There's going to be more guidance that will probably help answer some of the flexibility points around forgiveness. But what we're thinking about also is just with the coalition, with the other stakeholders, the broader business relief options, the employee retention tax credit, other elements of business relief. And also we're beginning to talk more and more about the restart and what needs to be done there to help the clients with the business model. So we've got these weekly sprints basically with new information, but it's really a marathon. It's a marathon of looking at all the different business relief options. And then it's going to be about leveraging some leading tools to help with the restart, to put in place capabilities for these businesses and to think a little bit differently. We think there's an opportunity to think differently about how the firms are supporting their clients. And those are things that we're putting a lot of effort into now as well.
Thank you, Eric. And I would remind you very much along that all of the people listening to this, the message that we've been delivering on these videos throughout this period of time is that this is a moment in time. This is a period of time where the profession will be critical to this restart, this recovery of the economy. And that requires all of us to apply not detailed applications of rules and laws, but to do the broad thinking, the trusted advisor thinking to help businesses really get through this, to survive. And if a high percentage of those businesses do, then our economy is going to recover more quickly. And that's really our message to you. Even as we deal with some of these specifics, it's about how can we be the true advisors to help the American economy move in a different direction and in a positive direction. So thank you for your time, Eric. Thank you for your leadership. And we look forward to, I'm sure, future updates along these lines as well.